Well, it's already slowing, in a historic low, and it will keep slowing. However, if you're my age, you remember that 6, 7, 8% mortgage rates were normal. We have just gone
but
through...
I do agree with that, but that's coming where everybody was paying the same thing, not having doubling in a year, Dick. That's my thing. We've gotten sort of, I hate to use the word addicted, but we've gotten kind of addicted to super low rates.
We did. And that's the fault of the Fed, and we need to talk about that. I think that's why we are where we are. But you'll also see ARMs come around. And an ARM now is probably more like in the 5% area. And you can keep that rate for at least 5 years before it's redone. So there will be ways to, if you really have to have a mortgage, that you can get one. But more and more cash is the way people are buying homes.
That's amazing. I think like 30% of all home transactions are cash. So that'll save that part of the market. Let's talk about the Federal Reserve, because in all due respect to all my friends and colleagues, we've just been debating on this network about the Fed's rate hiking strategy. I think the Fed's biggest mistake is not what they're doing now. It's to your point, which is the fact that they got us hooked on low rates. I'm more angry with the Fed about this uber low policy rather than bringing us back to some sort of normalization. What is your view?
You're absolutely correct. Let's just review what happened in the Fed. I think the Fed kept zero interest rates and QE far too long. Then the administration put trillions of dollars into the economy that were not required to revive to get economic growth. And what happened is that the money supply, M2, raised or went up at a 40% annual rate. This hasn't happened since World War II. So because of that, anyone who's had any history of this in economics would say you're going to have very, very high inflation. Shockingly and astonishingly to me, both the Fed and the administration said, oh, no, this is just transitory. There's no issues here. So they still didn't take the advantage of some more restrictive monetary policy. Yeah. And now we are today.
Dick, everybody's going after Powell. I get it. And he deserves, and the rest of the Fed, probably a lot of the blame for where we are today. Janet Yellen seems to be bizarrely escaping any criticism at all. The Treasury played a big role in everything, and all the money that has driven all this inflation. The Treasury just seems to be like, oh, yeah, you don't even hear from them.
I agree with you. That's why I say the Biden administration and the Federal. And, of course, you look to the Treasury Secretary to be the person who should have realized that there simply was no rationale for this comment of transitory other than for politics. And I think it was a big, big mistake. So finally and belatedly, the Fed has realized they're far behind the curve and had to take a Paul Volcker action, if you will, and raise rates higher and faster than any time since the 1980s. And so we are at risk to maybe overdoing it because they were so far behind and they're trying to catch up.
I know. Listen, I know, Dick, that Jay Powell has got a term. He's got effectively a contract, or you can call it whatever you want. Jay Powell's a political science major, former attorney, and worked for Carlyle Group. I don't know about Yellen and how it works at the top of the Treasury. If either of these two were running a publicly traded company, they would have been fired by now.
I agree.
They've been fired. But yet, do we need to see a change at the top to regain? Clearly, the bond market has no confidence in what's going on. I don't think that's, and by the way, it's not just here. The UK did the same thing. 30-year yields in the UK are soaring back to highs from 20 years ago. How do we fix this? We know how we got here. How do we fix it?
Well, I think the Fed is finally on the right track. I think that the Fed wants to see the Fed funds rate get to somewhere between 4.5% and 5% as quickly as possible, and then they may consider pausing at that time, or looking at the factors at that time, they may decide to go ahead or pause. But I think they know that they're behind the curve and they have to get this under control. And there's only it'll only take a few months, a few more raises to do that.
Yeah.
And then we'll see what's happened. And I think that we get around that period of time. And again, the economy is slowing. Inflation is coming down. We should be pretty close to where we need to be.
Dick Kovacevich, former CEO and chairman of Wells Fargo. Dick, we appreciate the blunt conversation. It's an important time. Thank you very much.
Shepard Smith here. Thanks for watching CNBC on YouTube.